Ramadan Mubarak to everyone. My name is Mundar Al-Sharji, the Head of Investor Relations in OQEP, and I will be the moderator in this call. First of all, I would like to thank all our attendants in this call, as this shows that you are interested to learn more about our company. We'll be very happy to accommodate all your questions later on. With me today, I'm going to introduce our presenters. We have Mr. Jaber, the CFO of the company, and we have Mr. Mahmoud Al-Hashmi, who successfully led OQEP as acting CEO, and now he is officially appointed as the CEO of the company, and we wish him all the best in this journey. And we have Dr. Anwar Al-Kharousi, who is the Chief Commercial Officer. We're going to schedule a 1 hour for this presentation. Let me give a disclaimer. Can you move to the next slide, please? Yeah, so in this presentation, we make forward-looking statement that refers to our estimates, plans, and expectations. Actual results and outcomes could differ materially due to a range of factors noted in this slide. Please refer to our annual report and MSX filing for more details, all of which are available in our website. Our presentation today, we're going to cover 3 parts. The first part, we're going to discuss about the full year performance of the company. And then we're going to discuss the growth strategy to 2023 and also the outlook for 2026. And we're going to end up with Q&A at the end of the presentation. Over to you, Mr. Mahmoud.
شكرا مدير. السلام عليكم ورحمة الله وبركاته. Good afternoon everyone and Ramadan Kareem. OQEP achieved a remarkable results in 2025 thanks to our employees for their dedications, collaborations and disciplines. Throughout the years, we prioritize safety, completing projects consistently, implementing operation excellency, and strengthening our financial disciplines. Despite the drop in oil price in 2025 by $10 comparing to 2024, we generated around 541 million Omani Riyal in adjusted cash flow from operations. Normalized operated cash flow increased by 7.5% year-over-year, and a strong return on capital employed rose to 51%. These improvements were due to optimized OPEX operating cost, better capital efficiency, and strong productions. In terms of production, we have achieved a level of 224,000 barrels of oil equivalent in 2025, which is superseding the target for 2025. Additionally, we reduced our capital expenditure by around 94 million Omani Riyals against the plan, and further, we optimized our operating costs by almost 76 million Omani Riyals comparing to the target for 2025. And we achieved with that operating cost per barrel lower than 2024 by almost 8%. We also having a strong balance sheets, net debt to EBITDA of 0.24%, which give us the leverage for future growth, inshallah. Reserve replacement remain critical for our business, sustainability of our business. So every year we try to replace what we produce. In 2025, we have achieved almost 160% total reserve replacement ratio. In terms of dividend, the company distributed 275 million Omani Riyal in cash dividend, both base dividend and also performance based in 2025. Additionally, to further benefit shareholders, we started the share buyback program, and with that we purchased around 27.5 million shares worth of 9.5 million Omani Riyals. In terms of operational excellency, we have accomplished two major projects in operated blocks, Block 60 mainly. The first one is Bisat Sea expansions. And this is very strategic project for OQEB in 2025, where we increased our processing facilities in terms of oil to 95,000 barrels of oil per day, and for the water, 800,000 barrels of water per day. With that, we managed to increase our production from Block 60 over 70,000 barrels of oil equivalent by end of 2025, and we are maintaining that productions. The second major project is Bisat Permanent Power, and with the completion of that project, we managed to eliminate in-house power generation from diesel and gas. And with that, we'll have a reliable power source, reducing deferments, reducing cost, as well, more importantly, we'll be eliminating around 280,000 tons of CO2 emissions annually. Additionally, another success story I would like to mention, and it will help our growth. We had two successful exploration in operated block. The first one is Block 48, a successful exploration. End of last year, we're currently doing the extended well test, and it will be followed with appraisal program in Q2, Q3, and hopefully we can conclude the result by end of the year. The second exploration success in Block 60, and it's Haushi, tested earlier this year, and we are currently collecting it for a long-term testing and appraisal program.
Yeah, just go sort of heading after yours.
With this, I conclude.
there's a meeting,
I
yeah?
can go
Yeah,
on and
finish
on for the achievements, but for the sake of time, I'll stop here and I'll hand it over to Mr. Gaber to take you more details into the finance.
Thank you, Mahmoud. And good afternoon to you all. So just to shed more light into our financial results for the year ending 31st December 2025, the company really achieved, as mentioned by Sir Mahmoud, very strong financial results, despite the fact that oil prices, as compared to 2024, dropped by around over $10, which are around 13%. But with that, we really managed to maintain the top line. So our revenue, despite the fact that we had a slight drop in the last hour of the year, in December 31st, where basically one shipment was moved into January 2026. Capturing that or normalizing that, our revenue really almost in line with the results of 2024, and hence our EBITDA as well. And maybe I can shed more light into the following slide into that basically event that took place on 31st of December at around 11:50 or 59 minutes. Our net profit dropped by 15%, and that mainly due to two, I would say, events which are basically one-time events. One was the transfer of the ownership of a barrage in 2024. We used to have 51% ownership in a barrage, and that got transferred in by mid of 2024 to our holding company, OQSOC. And the other one was basically the financing facility that we tapped into in 2025 and capturing the full cost in the financial results of 2025. Our capex grow, and that's really in line of our basically grow in the facilities that we have, as mentioned by our CEO, an increase of 5%. However, we really managed to
لقد تمكنا
business plan
من تنفيذ هذه الخطة
by around $200 million or an equivalent of around 70 million Oman Riyal. OQEP really enjoy a very strong return on capital employed, one of the, I would say, highest in the industry, around 51% in 2025 as compared to around 50. And we are really in the top quartile when it comes to delivering very strong financial results and cash conversion to the shareholders. Moving on to the next slide. So as I mentioned, the results for the Q4 as compared to the Q3 and the event I described in the beginning of the previous slide, that took place in December 31st, where basically we deferred, or basically the underlift of 1.1 million barrels into January of this year, and hence basically that's what the reason why our revenue get impacted. Eliminating that event, as I mentioned, our revenue or top line really very strong in line of 2024, despite the fact that oil prices dropped by around $10. And the main contributor really comes from two main factors. One is basically we managed to push more volumes, more sales in terms of oil and condensate. So our oil and condensate volumes really increased by around 1.4 million barrels in 2025 as compared to 2024. And the second reason is, as mentioned by the CEO, is basically the operational excellency. Our unit operating cost, we managed really to maintain it below the $10, and that really gives us, a plus basically point where it comes to the cash conversion that we are basically utilizing to meet our obligations when it comes to capex expenditure and maintaining our dividends payout. Moving to the following slide. So we really maintained a very strong cash position. So our opening cash balance for the 2024, or basically the closing of 2024, opening of 2025, we maintained the same balance as of the year ending 2025, despite the fact that, as I mentioned, the oil prices dropped by around 13%, and the high, would say, dividend payout that we really made during the year to the shareholders, but we still maintained around 160 million Oman Riyal, or equivalent to $416 million when it comes to the cash in bank. And that comes really from the high conversion we're having during our operations. I will hand over now to Dr. Anwar to give more into the asset portfolio and the mix that we're having within our assets.
Thank you very much, Mr. Jaber. As was explained by both the CEO and the CFO, OQEP has been delivering great value in 25 and inshallah beyond. We here show the high shareholder value that we have been achieving in the past year and the past several years through our high quality asset portfolio, through our basically strategic partnerships in Oman with the likes of Shell, BP, Total, ENI, Petronas, Occidental. So these are the partners with us who are delivering the production the targets in the joint ventures, as well as, of course, our own operated assets in Block 60 and 48. So we have been showing a growth of 9-folds in terms of production in Block 60 throughout the past years. Of course, this is all leveraging our operational and financial basically expertise. As was shown by Mr. Jaber, this has been achieved through our robust financial performance, very strong cash generation ability, the very low also operating cost that we have seen, and through our seasoned leadership team within OQEP spanning over 25 years of experience. This has led indeed to the total shareholder value return of some 20%, and the dividend yield of 6 to 7% according to the share price in this week.
Thank you, Dr. Anwar. So back into basically the market overview. So in this slide, we're showing basically how our OQEP share performed as compared to the basically to the oil prices in last year and also the beginning of this year. So as you can see, we really basically our share price performed very strongly. I mean, over 40% as compared to the oil price movement, which really indicates that from the various engagements that we have with the investors, the trust that we gained over the last over 1 year, as well as the strong financial and operational performance that the company really did over the last decade or so, and continuing on the same trend that really translated into a very strong, I would say, share price appreciation over the last 3 or 4 months.
Thank you, Jaber. I will here just allude into the reserves story that Mr. Mahmoud has highlighted. In 2025, we achieved the reserves replacement ratio of the 2P reserves of 160%. And this stemmed from the production that we have delivered and the additions that we have added. So our target, as we have communicated to you in the past several months, that maintain a replacement ratio of 100%. And in 2025, we uplifted that to 160%. Of course, during the year, we had a few initiatives which aided the reserves. We've added, for example, the Block 53 IPSA amendment, which gave us additional time in the IPSA, in the production sharing agreement, with the modified and uplifted fiscals as well. And we have been exploring, as Mr. Mahmoud highlighted, quite successfully in our exploration blocks, 60 and 48, and the others as well, which are going for appraisal and so on, such as Block 11. We've also achieved the gas sale agreement signing for Block 65 and for Marsa. And to this effect as well, we have been signing MOUs with the likes of the Turkish Petroleum Corporation, Petronas, and the Chinese NOCC and PC. And as you have seen in the news, we have been progressing the so-called Project Sun, the exploration of 15 blocks in Oman, and we have signed and advanced one of them, which is Block 18, through the partnership that we have newly sketched with Petronas. And Block 18 is an offshore new concession, basically, that goes for exploration in north of Oman. Perhaps with this, I will continue to provide you with a snapshot of the growth strategy that we have spent. One of our deliverables in 2025 is to come up with this new, updated, refreshed, strategy. We've designed basically our new purpose, which is basically energizing sustainable progress, delivering reliable, low-carbon energy and resilient value. Our vision, new vision that we have crafted after basically working with our stakeholders and our internal teams and boards and management, where we crafted a new vision for us to become the global energy champion of choice by maximizing stakeholder value through growth and innovation. And we will do this by our new mission statement, which is building on Oman's potential, expanding internationally while maintaining business resilience and delivering a robust portfolio with improved operational, financial, and people, basically excellence. So this strategy is based on a few pillars, and it calls basically to grow our cash flow, grow our production and reserves, and sustain that growth within the upcoming decade up to 2030 and beyond. And of course, diversify the portfolio base, expanding gradually internationally outside of Oman. So there are two pillars for our growth explained in this view graph. Number one is to continue to develop resources in Oman, maximizing the domestic growth opportunities in Oman, while building our basically talent, building our portfolio, and building our gas and oil investments, leading into integrated LNG projects such as the one that we have delivered, which is Marsa. Beyond that, we are crafting basically to build resilience and grow internationally, leveraging the government support, leveraging the IOC and partnerships in Oman to slowly basically go outside Oman in relevant geographies in the vicinity of the Middle East and North Africa. This we are basically doing via transferring the knowledge and expertise that we developed in Oman to take that outside of Oman. Next slide. Here we are showing that these growth pillars are production-based. We would like to aspire to achieve 300,000 barrels of oil per day equivalent per day from the portfolio of Oman, supported by the international, maintain the reserves ratio at the 100% level, continue to focus on Oman and leverage, as I said, with our government and with the IOC partnerships to go outside Oman in very disciplined, carefully selected, investment opportunities, maintain the financial discipline, and staying at the net debt to EBITDA, target of 1.5 times and below. And of course, maintain and improve our dividends as we go through beyond 2027 and beyond, to craft a payout of 25 to 35% of cash flow from operations as dividends going forward. Next slide. Back to Jaber.
Thank you, Dr. Anwar. So just to set the scene, for the guidance for this year, 2026, so as mentioned by Dr. Anwar, so when it comes to production, our production targets remain within the ambitions that we set during the prospectus. A target of between 220 to 230,000 barrels per day of oil equivalent, and maintaining the right mix of around 54 oil, 46 in gas, balanced portfolio. So that it really gives us that ability to maneuver during difficult oil price downtimes. When it comes to our operating expenditure, our operating cost, we maintain our portfolio to be less than $10 per barrel of oil equivalent. And the same also for the capex expenditure, our spend averaging between 0.8 to 0.9 billion at the net working interest level. When it comes to the right capital structure, as mentioned by Dr. Anwar, now we're set for growth. Our current net debt to EBITDA, as accumulated from the previous years, we are at a very low, around 0.24 multiples. However, we set it that way so that it gives us the room for growth, and hence we tapped into really setting the growth strategy for the next 5 years and beyond, and looking for opportunities to grow our production with ambitious targets of around 300,000 barrels by the year 2030. With that, we need to maintain the right capital structure in place, and putting a target of a net debt to EBITDA with the current oil prices of around one multiples, and at the stress oil prices less than 1.5. So with that, maybe a closing remark. Our portfolio today is very strong, and that comes from multiple factors. Really, we're having a very strong unit operating cost, very cost discipline, the right oil, I would say oil and gas mix, or assets varies really between heavy oil, light oil, and gas, as well as capitalizing on the expertise that we are having internally within OQEP, and especially when it comes to our operatorship of our flagship asset, Block 60, as well as our partners who are we're partnering with in the other blocks that we are they are operating, and we are partners in there, and we are maintaining very, I would say, efficient operations, and using their expertise when it comes to high delivery of projects, as well as production. With that, I would say thank you very much, and I will leave it now, open the floor for your questions, and you are most welcome.
Thank you very much. So, thank you, Jaber, thank you, Mahmoud, and thank you, Dr. Anwar, for the insightful session we had. So now we're opening the Q&A session. Please, for the interest of time, please restrict yourself on asking 2 questions per participant. And also the protocol here, if you have any question, you can raise your hand, and the support team will allow you or unmute your mic so you can ask a question. And also you can use the chat box as a feature to type your question, and then we're going to read it accordingly.
Hello, gentlemen. It's Boris Sinstein from Oman Investment Bank. I have two questions. The first one, sorry if I missed it, but could you please tell me your working interest production figure for 2025 with one decimal point, please?
For 2025, as we mentioned, it's 224,000 barrel of oil equivalents. That's our working interest.
Thank you so much. Sorry, I didn't find it in the materials. Second question is basically on your new strategy.
هذه الأسئلة وهذا السؤال يعتمد على الاستراتيجية الجديدة.
Sorry, shall I continue?
هل يمكن أن نستمر؟
Okay, let me continue and I'll ask the second question. Second question basically relates to the growth strategy. You mentioned that one of the ways to achieve your production target is basically M&A, both domestic and international. The question is how the management will ensure that the M&A and acquisition price, the assets which are going to acquire, actually are value accretive for the company and shareholders.
Very good questions, Boris. So when we're coming to the growth, we did not say it's 100% M&A. It's organic growth, and that's what we mentioned. We're having a exploration success in Block 48 and also Block 60, as well with our partner. So that's one side of the growth. The second part is the M&A, and mainly we'll be focusing on international as well, also local M&A. And for that, part of the growth implementation strategy, we're having a very clear screening criteria when it's coming to selection of the assets. And that has a strategic criteria, financial criteria, as well other criteria that goes through it. Secondly, we're having assurance review internally. And then we're having a third-party reviews when it's coming to the selection of the assets.
Thanks. And actually, follow up on this. You mentioned in the presentation that your maximum financial leverage level is 1 times net debt to EBITDA. Doesn't mean that in any case during acquisition you will target not to exceed it.
The 1.5, as we said, currently we are 0.24 folds, and the 1.5 is a stress case at the low oil price. But at high oil price, we can go higher than that, up to 2, and that's if we compare it with other international EMB company. So we can go to 2 at a high oil price.
Yeah, hi. Thank you. Thank you for the opportunity and thank you for having the call. Hope I am audible. So just a couple of questions. Number one is that you have given us a guidance that the production will increase from the current 224 to 300 per day. So how do we see this increase? I mean, do we see it gradually? That is, on an average, this growth comes to around 6% over the next 5 years. So do we see this incrementally, or do we see a very high proportion of production coming in the tail end of the estimate, that is close to 230, or do we see a gradual increase? That is one. The second question is relating to the dividend. So, see, the current dividend policy is 90% of FCF, and I think that is going to continue in 2026. From 2027 onwards, the management is talking about 25 to 30% of operating cash flow. So how do I understand this? Are we going to see a new dividend policy? Will the minimum dividend of 231 million stay for 2027? Or how do we see this? Is there any change in the management's the policy in terms of dividend post 2026?
I'll answer the first question, and the second one for the dividend, I'll give it to the CFO to answer it in detail. So for the growth, it depends. Our ambition is to go to 300,000 by 2030, and it depends on the availability of the good acquisitions. We can do it. If we can do it earlier, that will be great. And also focusing on the other financial parameters, just to ensure that It's not accelerating the 300,000, but also we need to make sure we are also meeting the other financial criteria. What we will do is we try to accelerate it, but we'll do it gradually.
Thank you, Mahmoud. So with regards to your second question, with regards to the dividends policy. So as you mentioned that the current dividends policy, which was set in the prospectus, it goes into the end of this year, the end of 2026, where it has basically the 230 million Oman Riyal as base, plus the performance linked dividends, which is assessed at basically the end of each half of the year. Now, beyond 2026, now the company is evaluating, basically in line again with the growth strategy that we embarked on. And as we stated earlier, that now we'll be coming with a new dividends policy for the years 27 and beyond. And that will be basically set. We looked into a couple of benchmarks within the industry, within the oil and gas industry, and also within the EMP companies, the major IOCs and NOCs, and hence we came up with the guidance of 25 to 35% of CFFO, which is cash flow from operations. And that's basically in line with the current, I would say, distribution that we're having. Of course, the company is in the growth mode, and hence we thought that now it is the right time that we really benchmark ourselves to the IOCs and the NOCs, and we really go into the same trend going forward.
So just one clarification on that. So what about the minimum dividend? Will it stay, or the 231 million from 27 onwards, or it will fall under the 25 to 30%?
So in that, with regards to that point, we are moving basically away from the minimum cash dividends, and hence we are going basically for a more of, I would say, a range, more of a performance driven, in line, as I mentioned, in line with the best practices in the market, that really gives the shareholders more returns where it comes as a result of the growth, and hence moving away from a minimum cash dividends restricted, that restrict really, high distribution to the shareholders when we're having basically high production, or basically having also higher cash flows from as a result of high oil prices, into more of a flexible policy that really rewards the shareholders. If there's any growth in the company, of course the shareholders will get rewarded accordingly.
Got it. Thank you. Thank you very much.
Can we listen now from Elder?
Yes, thank you so much. This is Elder Kazi from HSBC. I hope I'm audible. Can I ask you first about the potential M&A targets? What kind of regions are you looking for if you want to expand internationally? And what kind of partners you have in mind? That's my first question. Second question about production in Q4. Any chance you could comment on the quarter-on-quarter trend? It looks like production for oil and gas slightly declined quarter-on-quarter. Is that the case, and why this is the case? And separately, can I ask you about the average yearly contribution of Block 60 to total production of oil in 2025? That also be very helpful. Thank you.
Thank you, Elder. Maybe I'll handle the first part. So in our strategy crafting that we developed last year, we are contemplating that we will focus in the vicinity of the Oman region, so Middle East, North Africa, and wherever we have leverage into. The targets that we are looking at and analyzing will be low-risk targets, producing or near-producing targets, and we will ensure that we have a robust operator in place. So the operatorship has to be existing and robust, and it has to be in the development and or producing basically phase. We think with this basically, and the investment criteria, as the CEO has highlighted, we have a rigorous investment criteria that we will go through for each basically opportunity that comes across our way. And only then we will basically advance, such investments. The second question was about production. Maybe Mahmoud will handle that.
So regarding the production for Q4, there is no drop in production. In fact, it was higher ever in Q4. What you have seen in the slide, really that's the shale oil. And it was because of underlifting, okay, on the 31st of December. It was lifted 10 minutes after midnight, and that's why we could not put it part of 2025, and it will be included in 2026 financials. For Block 60, as stated, we closed the year, the total production gross over 70,000, and we continue producing above 70,000.
Thank you. How about the average yearly contribution? What was the average production on the block?
Above 65,000.
Thank you. And lastly, sorry, can I ask you also about the CapEx? It looks like the CapEx number for the year was a bit lower than you guided previously. Why was this the case? And is there any chance that we might actually see higher than guided CapEx in 2026 instead?
So for the CapEx, there are different elements. One of them is drilling performance, especially in Block 60. We managed to reduce the drilling times and also change the well types just to reflect the drop in oil price. And we have a good reduction there. The other thing is really those projects not related to oil and gas or production, we defer them. So we have restructured our capital expenditure accordingly. For 2026, I don't expect to see any increase in the CapEx we allocated.
Thank you.
And we are monitoring the oil price as we speak. And if there is any things, we'll be acting accordingly.
Thank you, Boris, for the question. Let's have some questions from the chat box. So we'll read it out. Thank you, presentation. I have two questions. The provision of decommissioning increased by 77% this year to 75 million Omani Riyal. Could you shed some light on what drove the significant raise? And the second question is for the same person. OQEP secured a 4-year extension in Block 48. However, the assets net position dropped from 13.3 million Omani Riyal to 3.1 million Omani Riyal. Can you quantify the minimum work commitment required?
Yes, so with regards to the first question for the provision of the decommissioning, so yeah, I mean, we look normally part of the year-end exercise along with basically the assessment that we do for the decommissioning activities and the site restoration. There was basically directives from the Ministry of Environment for the closed wells that we need to increase the provision. There was a ministerial decision that came from the Environmental Authority of making a certain provision per well for the oil wells, the gas wells, and also the water wells. And hence we had to increase the provision into our books for that, because part of our key pillars and key principles were basically where we operated basically the license to operate and compliance to all the governmental regulation when it comes to environmental aspects, and hence we had to comply with that regulation that came from the Environmental Authority.
Maybe on the Block 48 query on the minimum work commitments, Indeed, we did secure an extension for the block from the government, and we agreed with the government that we will be conducting seismic to basically further and more accurately address the volumetrics issue of the current appraisal and the future exploration in the Haushi in particular. And we promised to drill 2 wells in the block.
Thank you, Anwar. We'll take one more question from the chat box before we give a chance to Mohammed Al-Thunayan. This question from John. Hi, I'm John, reporter with Energy Intelligence. How do you view the political instability in the region? Are you concerned about the attacks on energy infrastructure? And are you taking any preparatory measures? I think also this is related to the question from Anwar, that if the Strait of Hormuz stays blocked for oil export in the current scenario, can Oman use the southern port for the oil export?
Like other EMB companies, we are monitoring the situation really very closely, and we're working closely with the government. And we're hoping for de-escalation of the situations. Regarding if Hormuz get closed, our production, most of our production is outside the Hormuz. It's coming from Mina al-Fahel and Duqm, so there is no impact in our productions. But again, we are monitoring the situation very closely with the government. As well, we have a business continuity team that's there working 24/7.
Can we listen to a question from Mohammed Al-Thunayan? Can you unmute his mic, please?
Assalamu alaikum. Sharaik Mubarak. Thank you very much for having us on the call. Just a question. I'm just trying to apply the new dividend policy of 25 to 35% of the CFFO to the company's 2025 and 2024 cash flow from operations. It seems that the total dividend distribution at the higher end, which is 35%, will decline by around 33.5% versus 2025 total dividend distribution of 275 million Omani Riyal, and 24.8% if we apply that for 2024 CFO and compare it to the base dividend of 231 million Omani Riyal. Is my understanding is correct?
So the way how you apply the formula, Mohammed, you just need to also take into consideration also the growth that basically the company is embarking on. So when we set the policy, it's not on the current production level. It's basically on the growth production level and the growth mode that the company basically is entailing to. And hence, taking that into the picture or into the formula, it will translate to the 600 plus million.
600 million plus, that's cash flow from operations, right?
Muhammad, when we are putting the strategy, this is Mahmoud, okay? We looked into this one average of the next 5 years. So the dividend will be better than what we are giving now. So, and that's for 2 things. One is because it's linked to the oil price as well as the productions. So taking these into consideration, averaging the 5 years, okay, the dividends will be better than what the fixed one we have now.
Yeah, but I mean initially for 2026 and sorry, for 2027 and till 2029, the dividend would be lower by approximately, I would say, between 25 to 30% versus the base dividend of 231.
That's not correct. And I think maybe you can take it offline how you do the calculations with the team.
Sure, we'll do that. Thank you.
We're reading a question from Yaqub Al-Kalbani. Thanks for your time, Ramadan Kareem. I want to know what is the timeline for the gas monetization activation?
So for the gas, this is maybe regarding Marsa project, and that's where we're having the upstream and downstream. Construction of Marsa LNG is ongoing. I think by year end, we have already achieved 39% completion in the project, and we're hoping that the first shipments will be sometimes Q1 or Q2 2028, inshallah. And it will be the first green LNG cargo from Oman.
And maybe I will just add that when you say monetization, Marsa is already monetizing gas by selling the gas through GSA, existing GSA. The GSA that we newly signed is to allow gas purchase and sale during the LNG operation. So at the moment, Marsa is monetizing and selling basically gas via an existing GSA.
Okay, can we hear now from Sandesh? Sandesh, hi team. Regarding Block 65, now that the gas sales agreement is signed, how does the agreed tariff structure compare with the Musandam gas plant? Additionally, what is the specific target date for first gas? And his second question is, and what are the development on Block 18? If you could shed some light of that block.
So for 65, this is an oil block with Oxy. We're having 49%. And this is associated gas. So it's already in the pipeline. And this is just an agreement being extended. The old one was during the initial appraisal programs and now extended for 25 years. So there's no link with MGB. This is directly with IGC sale gas agreements. For Block 18, I'll give it to Dr. Anwar.
Thank you, Mahmoud. Block 18 is indeed one of the new blocks that stems out from the so-called Project Sun, which is one of our growth projects started last year. And we've signed basically an agreement with Petronas and the government of Oman. Petronas will be the operator, owning 70%, and OQEP will own a minority stake of 30%. The royal decree was issued yesterday, by the way, and congratulations to all. The idea is to conduct a study now, and then seismic, and then drill a well within the next basically 2 to 3 years. And if successful, inshallah, as per our understanding, this will open up the entire basin, offshore basin for Oman in the northeast of Oman, inshallah.
We have 8 more minutes left for the session. We can take 2 more questions. So let's read out from Anwar, and then we'll go back to Kaushik. Mr. Anwar is asking, what about the share buyback policy? Will it be executed or not this year?
So with regards to the share buyback program, we started the program back in August or September last year, and we achieved around 55 to 60% of the program until on the 31st of December 2025. We're monitoring the stock market. I mean, as I mentioned during the presentation, we really seen the impact of the program in terms of the share price appreciation, averaging between 25 to 35%, and we're keeping very close eye on that, and also while the program is still intact.
Yeah, thanks for having that. Just one clarification on the treasury buyback. So what is the management's plan with the treasury shares? Are we going to extinguish it or use it for acquisition, or what is the plan?
So the plan for the treasury shares, as per the regulation, the holding period is 1 year from the approval, and then subject to a further 1 year extension upon the approval from the board of directors and also from the Financial Services Authority. After that, the company is basically mandated to sell back these shares back into the market, or maybe to any potential institution or basically anchor investor.
Okay, thank you very much for attending this session. We're always happy to receive your questions afterwards. You can send your questions directly to IR, in the email designated in the website. And looking forward to see you for another session. Thank you very much.